think it's time for our webinar to kick off today. So I want to just welcome everyone to our on-farm solar PV training webinar. Today's topic, as you're probably well aware of, is dealing with solar financial options. We're primarily going to be talking about smaller scale installations for on-farm use. We'll touch on some utility scale issues as well, but primarily it's going to be that smaller on-farm use, kind of in continuation of what we've talked about in previous sessions. And I'll mention at this time, as we're kind of waiting for others to join us on the webinar. I know we have a big number expecting to join our program today, but I'll just start by saying this is part of an ongoing webinar series that we're delivering through the University of Maryland Extension, in particular the Maryland Energy Extension Program. So as part of this webinar series, to date, we've touched on a number of topics, and all of the previous recordings are on the Maryland Energy Extension website if you missed some of those. We've talked about the solar market and the role that solar photovoltaics plays in the energy marketplace in the state. We've talked about how to design a system and the sizing of the modules and inverters. We've touched on a lot of those issues, as well as more of the permitting and zoning side of things. Again, mostly from a small scale installation. Again, we'll continue talking on a small scale, whether it's a rooftop or ground mounted system. In the coming weeks, we'll have a session in particular looking at utility scale projects. But again, we're going to limit our focus to those smaller 10 to hundreds of kilowatt systems that are commonly seen on farms and employed on farms for their own energy use. And so we'll look at a number of financial topics today. It's quite a bit of content, and we'll try to cover what we can. Of course, with only an hour to cover this material, we're going to kind of just skim the surface and get started looking at some basic tools to analyze how you finance these systems. And we'll see where we can go in the future. In particular, if there's interest in a specific area, we could do more programming, more robust programming on the finances associated with solar photovoltaics. But with that said, I'll just start with an introduction. My name is Drew Chavone. I'm an energy extension specialist with the University of Maryland. My background is in agricultural engineering. I've worked on a number of different areas related to energy conservation on farms, to energy auditing, even some of the renewables, of course, like solar photovoltaics, but also biofuels. Some of my work and other efforts that the University of Maryland Extension is involved in, you can check on the website. That's extension.umd.edu/energy. And you can get a number of resources there, and I'll point you towards that website throughout today's session and throughout this whole webinar series. Because we do have a lot of interesting information on there, including the recordings for all of these webinars. And so I'll be presenting the topic today, and I'll say I'm not an expert financial advisor, and I don't want to take the place of one, and it's not my intent to sell you a system or anything like that either. But I'll say, just as a precursor, it's best as we look at some of these different costs and incentives associated with solar photovoltaics, you always want to assess this alongside with a financial advisor or a tax specialist to see if it's a good investment for you in particular. And so we'll just kind of touch on some of these topics going through the program today. So with that said, let me just give kind of logistical rundown here. As I said, all of the previous sessions have been recorded. This one is being recorded as well. So this information will be posted on the Maryland Energy Extension website. If you missed part of it or you want to go back and review it, you're welcome to do so. All of the presentation materials will be shared on there. And with that said, if you have questions, put them into the Q&A feature, and I'll do my best to answer those as we wrap up the program today. But you can at any point put those questions into the Q&A feature. Now, before we get into the actual content for today, let me start by opening our first survey. Let me see where that is. I'd like to just launch the questions as I usually do, just to get an idea of who's on the webinar today. So if you take just a quick minute before we get into the content today, let me know kind of what your interest level is, and it'll help us to cater the programming more towards those interests that you have. So I'll give you a minute to do that, and then we'll kind of jump into the content. Give you a little more time to finish that up. Seems like we have quite a bit from the farming community, and that's good. We have a mixture of other folks joining us as well today, and a lot of diverse interests as well. So I'm not going to share the results with everyone, but and I won't share it with anyone, but it's just good to know. So I'll go ahead and close this survey. Thank you for participating in that. And we'll look at what some of the content that we'll address today. We'll kind of look at the different costs associated with the solar photovoltaic system. And so we'll look at a variety of trends in the marketplace and what these systems cost. And again, this is going to kind of be a case-by-case basis based on the type of system that you're designing and specific circumstances on where the installation is and a number of other factors. But we'll talk about some of the costs that will be beneficial to investigate up front. Then we'll shift a little bit later in the hour towards different financial opportunities, incentives and rebates, grants, loans, and see some of the options that are available in Maryland. Then we'll put all that together, so the cost side as well as the finances and incentives, and we'll see how we can couple those together towards the end of our hour and look at how we can evaluate the systems as an investment in terms of various metrics and models. So I'll start just again by reiterating the fact that we're going to be talking primarily about those smaller scale 10 to hundreds of kilowatt systems, typical for on-farm use. So we're not really talking about utility scale systems. And with that said, I also want to point out we're going to spend most of our time talking about systems that are purchased and owned by the end user. We'll talk a little bit about leasing and PPA, power purchase agreements, but we're going to spend most of our time talking about those systems that are outright purchased. And there's a lot of interest in the state of Maryland. You'll see the trend increasing across the board. A lot of people are purchasing the systems. There are various benefits and motivations for that. One that I'll just make a comment on is if you purchase and own the system, then you can take advantage of the federal tax credit and other tax credits that might be available. Where if you're leasing it, you don't own the system, and so you can't really take advantage of that. Now, there are certain cases where, let's say, if you don't owe the IRS any tax, if your liability is significantly low, you might not be able to take advantage of that tax credit. So maybe a leasing option would work out for you there. Just going to throw that out as another option. So there are benefits to both owning and leasing a system, and you kind of navigate that on your own based on your own specific needs. But again, we'll spend most of our time talking about the systems purchasing, and we'll go over some examples on how that tax credit works in terms of saving money on the upfront installation cost. Again, you'll see, historically, and by historically, I mean the past 10, 20 years, there's been quite a bit of leasing, third-party owned systems, but we're seeing an increased trend, and certainly this is at a national level, but certainly we're seeing similar trends here in the state of Maryland. Again, I suspect a lot of that is to take advantage of some of the financial incentives of owning the system, and we'll talk about some of those as we proceed. But if we look into current times, in the past couple of years, it's been increasingly owned systems and purchased systems. Now, we'll look at some of the costs, as I said, as kind of a precursor, and see what the installation cost is for the system. And we'll break it down more specifically, but we'll start just by looking at overall trends. If you look back 15, 20 years, the price for installation was much higher, almost $10 per watt going back 20 years ago. If you go back even further in the 70s, and we've kind of talked about these market trends in an earlier session, but if you look at the market trends back in the 70s, it was closer to $100 per watt, and it was not a very widespread technology at the time. And now it's becoming much more affordable. It's approaching $1 per watt. With Maryland, it's probably close to $2 to $3 per watt installed, maybe an average around $2.50 per watt to install. And we'll break that down, what's encompassed within that. But I want to draw your attention to what I shared on the right-hand side of the presentation. If you have that in front of you, the levelized cost. And what this does is it takes into account the operation and maintenance costs, which with technology like solar PV is very minimal compared to conventional things like coal or nuclear power, which are shared on that illustration. Those conventional resources, a lot of maintenance and operation costs. We talked about some of the things that solar will require over its duration, but it's pretty minimal in comparison. The fuel cost for solar is also relatively, well, it is free, whereas nuclear, coal, that has a fuel source attached to it as well, which makes the cost of solar photovoltaics more compatible or more comparable to those conventional energy resources. Point out one thing with the illustration here with levelized cost is this information is for thin film technology. It's not talking about mono or polycrystalline. So that might come down depending on the technology that you have. But you see, again, also a difference here, if I could highlight a difference between the unsubsidized on the left and the subsidized on the right-hand side. It's the importance of including those incentives and financial savings on that system is to further drive the cost down to be more comparable with conventional fuel and energy resources. Now, the cost of the system, of course, that's the topic of our discussion in today's webinar, but there's other motivations for installing solar and the environmental benefits as well. But we're primarily going to talk about solar photovoltaics today in terms of the investment opportunity. A couple other trends I'll point out before we kind of get into more specifics. You'll see the size of systems is increasing over time. And so whereas 20 years ago, we had much smaller in terms of the kilowatt, again, that's the power or the size of the system. The size of the system is increasing overall, as well as the efficiency. If you look in the bottom graph, you'll see efficiency has climbed over time across the board for all different technologies. A lot of this has to do with the module efficiency, and that's what's indicated here. You'll also see in this darker region on the graph, if I can highlight that for you, that darker region is monocrystalline. So you see the more efficient monocrystalline taking up a greater share of the marketplace. And so we're, again, seeing increased efficiency. The graph on the right-hand side, again, indicates that same trend. We're seeing increased power and increased efficiency kind of going hand in hand across the board. We have more, the new research and development and the new technologies that come out of that are more efficient, and we're getting larger systems to support energy demand. And we'll talk about some of the reasons why momentarily. Again, just another recap of the prices per watt reducing. And so in the top figure, you'll see, and I'll highlight in the center is for the non-residential. So that would be what we're talking about with commercial applications. On-farm solar photovoltaics would fall within that category, and you'll see the prices have dropped. And in this example, it's a national average, a median. Going to 2018, it's $3 per watt. And like I said, that's kind of what we'll see here in the state of Maryland, anywhere from $2 to $3, but it depends on the type of system and the size of the system that you're installing. The price is driven down for a number of different parts of the system. In particular, you'll see here the module price dropping over the past 20 years. In part because of that efficiency improvement. So the newer technology and the improved efficiencies have caused that price to drop. You'll also see some minor improvements to the inverter as well due to efficiency. And so some of those costs have driven down. Now that's some of the hardware costs. There are of course other parts of the system, from the wiring and the cabling to the racking and mounting systems. But as far as efficiency improvements, that's happening mostly with the module and inverter. When you're talking about the raw materials used for the other components, steel and aluminum and copper, those are more of a function of the raw commodity prices. There are some other soft costs, and we'll kind of highlight what those, what's entailed in those soft costs as well. And those actually account for quite a bit of the cost. But I just want to share some of these trends here. And also draw your attention to the table that I've shared on the right-hand side. Of course, the type of technology that you install is, some technology is more expensive than others. And I've indicated here for a microinverter, which is probably about 40% of the market share right now, microinverters. And if you want to go back and review some of the difference in those technologies, you can do that in one of the previous sessions. But microinverters are becoming more and more common, and there's good reason to do that. But there is a cost difference there. It's almost 40 cents per watt, whereas a string inverter is closer to 8 cents per watt. So there is some price difference there, depending on the type of equipment you install. But we'll talk about some of the general trends moving forward. Again, looking at module price, if you look in the top row, you'll see module price dropping. Well, let me see if I can get my highlighter back. If you look at the top row, you see the prices for the module dropping. 10 years ago, it was over $2 per watt. And again, the efficiency of those modules has benefited the overall cost of the system, driving that down. The other costs have not dropped as significantly, and for some of the reasons I've already mentioned. But if you take a look at that pie chart on the right-hand side, you'll see kind of a breakdown of those costs. The module, based on those reductions that we've seen in the technology, and it's still, I'll mention, it's still continuing to evolve. We're having new technology like multi-junction and other technologies that maybe one day will become commercial in the near future, perhaps. Will become more commercially available, and will decrease that more. But right now, modules account for around a quarter of the system cost. The other components are a little bit less than that, but what I do want to point out is these soft costs that you'll see on the pie chart. Those account for over half of the cost of the installed system, and that's a little bit harder to drive the price of those soft costs down. That includes everything from permitting to the inspection and a lot of other things. We'll get specific on that later, but labor is also included in this pie chart at about 9%. It could be 9–10% would go into the labor, and you'll see minor reductions in those areas overall. Again, it depends on the type of system that's being installed, but those costs are pretty significant. You look at a country like Germany that's led in solar development, and they've maintained pretty low soft costs, and I think that's probably benefited them in their history of solar development as having lower permitting and other soft costs associated with it. So again, just to show where we're at is around $1.83 per watt. Again, if you get a bid for an installation here in Maryland, it might be a little higher than that. It really depends on specific design parameters and other factors coupled in with that. Simpler way to kind of look at this breakdown, again, in the bottom portion, you'll see that the equipment costs, all the hard costs, going back to 10 years ago, those hard costs were about 50% of the overall installation. And that's declined over time. If you progress forward, you'll see that hard costs have decreased. Now, again, due to efficiency and other factors, it's gone down to about 31%. Now, on the other hand, those soft costs, those have remained fairly consistent overall in terms of the actual investment involved with those. And as a result, because those soft costs have remained consistent, they're now taking up a greater proportion of or percentage of that overall cost. And so it might be in this figure about 58%. But typically more than half of the cost is going to those soft costs. There's obviously difference, as I mentioned, between the size of the system. On the left-hand side, you'll see the residential systems. Typically those smaller systems, I mean, you don't have the benefits of the economy of scale, but there are a lot of permitting and other issues associated with that, with the soft cost with the residential side. If you're looking at larger commercial systems, which is more typical for the on-farm application, you'll see a little bit reduced prices there. And again, we're not going to spend too much time today talking about utility scale. That'll be something we address in a future webinar as part of this series. To give you a better idea of kind of breakdown what's included in that soft cost, in this illustration on the left, this infographic is showing about 64%. That might be a little bit high, but again, that depends on a case-by-case basis and the jurisdiction that you're in, what the permitting costs and other things are going to be locally. But you'll see some of those other things, the permitting fees, sales taxes. This figure includes the installation labor, which I broke out separately earlier, but in this case, they're including that number. But those are all the soft costs there. And again, you'll see on the right-hand side kind of how that has played a role in the overall cost of installation. And so you'll see close to where we are now, this goes back to 2018, but it's about 56% of the cost of a system for a commercial system. And of course, there's a difference there between utility and residential. So residential, that blue line on the top, is a little bit more expensive in terms of the soft costs. There's additional measures that have to be taken with that. So those are some of the costs that briefly touch on a few other costs that might need to be considered. For many states, you'll have sales and property tax to deal with, but in Maryland, solar PV is exempt from state and local property taxes, and it's also exempt from the state sales tax. And so really you don't have to worry too much about that. That can always change. And as with anything that we kind of cover in today's webinar, it's best to go right to the source and make sure you're getting up-to-date information. I don't want anyone to rely on this information for the long term. But where we are now, we were exempt from all those sales and properties taxes. So we're not necessarily going to need to account for all those. Insurance is another thing that could add to the cost of the system. And a couple considerations that I've kind of pointed to on the slideshow here, but typically on your rooftop, especially with residential systems, it'll be covered under your standard insurance policy, so you won't have to worry about adding to it. But you know, one aspect is you might want to raise the coverage limit if you have a really expensive technology sitting on your roof, or if it's a ground mount system, you might want to look into options for raising that limit, just to account for anything that could go wrong there. When you're having an installer do the work, you know, again, check their insurance as you're considering bids, and make sure they have good workmanship warranty and other aspects that'll protect not only the system, but, you know, if it's a rooftop system, you want to make sure your roof is maintained in good condition, that there's no damage there. You know, I'll say with the non-residential side, if you're looking more in terms of what we're talking about today with on-farm installation, you know, you may want to look into additional insurance, general liability, environmental risk, or property. There's a number of factors you might want to look into that could drive up the cost from that side of things. And then operation and maintenance also plays a role, and I've seen a number of different bids incorporate this in different ways. In this example that I'll share, they're looking for a commercial system. It looks like just under maybe around $17 or $18 per kilowatt. It really depends on how you kind of factor in things. I mean, if you're looking at replacing an inverter, you know, after 10 or 20 years or something like that, or a module, if that has any damage to any of the components, or there's a failure or drop in the efficiency, any degradation, you'll want to replace that component. So that would get factored in here, or any other monitoring or other aspects. And it really, again, this is a system by system basis, but this is kind of maybe a low estimate, depending on what type of system you're looking at. You might want to look at more hefty, you know, the example we'll go through later, I think I include closer to $50 per kilowatt. Really just depends on the type of system that you're looking at. And maybe this is conservative, but yeah, it really depends on the specific conditions. And so we'll look at how we kind of incorporate some of these different costs as we move into the actual analysis later on. But I've kind of thrown a lot of different price tags at you, and those are things that you'll want to consider for a system that you're exploring. Now we'll switch gears and look at kind of how these are financed, look at some incentives, rebates, grants, and other aspects, and then we'll put all that together towards the end. So the first thing I'll point out, and I've mentioned this earlier and in previous webinars as well, is the federal tax credit. And so what this is when you go to file taxes with the IRS, you can apply for that credit if you have high enough liability. Currently, this year, it's been at 26% of the cost of the system. Now, this year is almost over. There's less than 2 months to go. So this will go down to what, 22% next year and continue to drop. Beyond 2022, it's going to go away for residential systems. And so you'll see here towards the end of the graphic that for residential is dropping off, but commercial, like we're talking about with on-farm installation, will remain at 10%. So you'll still be able to take advantage of that in the future. But for today's webinar, we'll kind of stick with that 26% as kind of an indicator and a tool of the savings that you can have. And I'll say you can also roll this over. If you can't use all of it within the first year that the system is installed, you can continue to save in subsequent years based on your tax liability. So that's another aspect there. But again, go to the IRS website, get more information there. And there's, of course, other resources that are available through this presentation and on our website as well if you want more information on that. The other aspect we'll talk about is depreciation, and this is using the Modified Accelerated Cost Recovery System, the MACRS system, cost recovery system, to for businesses. So this is not going to apply to residential installation. So if you're kind of interested in that, you can kind of tune me out for the next second. But this MACRS cost recovery system is for businesses to recover some of their investments in solar technologies through depreciation deductions, and it's typically classified as a 5-year property. So we'll kind of go through an example of how this depreciation works for a business. On the right-hand side, you'll see an example system here. I've set this at kind of a fairly large system, $300,000, and that's without any incentives. And so you'd be responsible for that cost outright. Now I'm going to apply that federal tax credit. In this case, it's 26% currently. But in terms of this MACRS cost recovery, you have to do it on a half of that basis. So I'm going to say the percentage, the federal tax incentive is 26%. But I'm going to take half of that, which is 13%. Okay, so I'm going to remove 13% of this value, brings me down to $261,000 after the federal tax credit. So we're down to $261,000. Now, before I run through the rest of the example, I'll point out that with the federal tax credit, it's not like your price now is going to be lower in terms of the upfront cost. You still have that upfront cost to cover, and then that tax credit is just that. It's a credit that goes through the tax system. So you're going to get that money back, so you can balance your checkbook based on that. But again, you have to have that upfront investment there. And in this case, we're looking at after that tax credit. Well, this is only accounting for half of that. This is the depreciation basis. But if you look back at that information I shared with you on the tax credit, remember that you still are responsible for that upfront cost. So let me go back to this example of depreciation. If we have a system cost of $300,000 and we're going to base that on half, based on this schedule, we're going to have half of that tax credit come off for the basis of this depreciation will be $261,000. And then we're looking at two aspects here. We're looking at the federal and the state depreciation. And so I have different tax brackets for each of those. In this example, we'll say 24% for the federal and 7% for the state. And if you look at the table on the the left-hand side, you'll see that we have right now a bonus depreciation of 100% for a system that's installed before January of 2023. So we're within that 100% bonus depreciation. we can apply that here in the first year of our maker's schedule. And so we're able to depreciate that 100% within the first year. And you'll see the state depreciation is split over the 5-year schedule. Okay, but you know, your savings in the first year is $66,000. It's rather high because you're getting that full federal depreciation as well as the state depreciation as well. But in total, if you look at all 5 years of that cost recovery schedule, you're saving $80,000, almost $81,000, which is more than a quarter of the cost of the system. So that's some of the benefits to depreciation for businesses, and that's a good financial incentive to consider. Now, we'll touch on a number of other programs as well. I'll point out some here associated with the Department of Agriculture, USDA Rural Development. In particular, they have a Rural Energy for America program, otherwise known as the REAP. They have various cost share grants and loan guarantees for your lender. And typically they have 2 deadlines, one in the fall, one in the spring. So October just wrapped up, and that's typically for the smaller projects, less than 20,000. In March, there's a deadline for projects of all sizes, the smaller sizes and larger systems. And they cover a variety of energy efficiency as well as renewables with solar photovoltaic included. So you can see a rundown. Again, it's best to go right to the source. And so I've included the website there. That's rd.usda.gov. So you can go to their website and get up-to-date information. But for the energy efficiency side, which is, you know, we've talked about it in previous webinars, that's closely coupled with renewable energy systems. And so you want to combine those if possible. But they have grants for energy efficiency, $1,500 up to $250,000. Renewable energy grants, $2,500 to $500,000, and guaranteed loans as well that can reimburse up to 25% of your eligible costs. So you can combine the grant and loan and go up to 75%. So there's various options there with the Rural Development USDA programs. I also want to talk about the commercial PACE programs, which stands for Property Assessed Clean Energy. A lot of states have these different models, but basically it allows you to finance clean energy retrofits through property tax increases. So it's secured by the property and not by credit scores or anything like that. And so you're using the borrowed capital. It's either public or private funding to pay upfront costs for energy efficiency or renewable energy retrofits or improvements. The capital that you borrow, it's repaid over time. It could be 10, 20 or more years. By a voluntary tax assessment. So it's kind of a unique aspect, and it has benefits of having $0 down financing and those long repayment terms. Again, it could be 20, 25 years, and low interest rates, typically fixed interest rates around 5 or 6%. And so that helps kind of offset that upfront cost. They typically issue rather large amounts. It's typically larger projects, but there's a lot of potential for the agricultural community to take advantage of these. It's a program in partnership with the Maryland Clean Energy Center and PACE Financial Servicing. The product, if you want to call it that, is Maryland Commercial PACE, and you can go to their website and get more information. I think I have their information on the next slide. So yeah, their website is md-pace.com. And you can get more information on them. They're available in most counties of the state. I am in the Western Maryland Research and Education Center here in Washington County, which is one of the few counties that does not have a PACE program in place right now. That may change in the near future. So that's an option there. But a lot of counties, most counties have that PACE program in place. Again, it can be used for various things from energy efficiency to renewable energy systems, solar PV included. You know, to keep hopping from different financial incentives, we'll go to another very important one is net metering, which many states have, like Maryland does. And that's a way to virtually bank your excess energy. So if you are producing more energy than you're using, you can send that electricity onto the grid. And that would obviously be for a grid-tied system. And so that electricity is sent to the grid, and they'll credit you that because the meter works both ways. And when your system is not generating electricity, you can pull energy back from the grid and use that. And so they kind of reconcile that account month by month. And at the end of the year, they'll probably reconcile that, and they may owe you money depending on specific arrangements that you have with your utility provider and the local laws. And we'll talk about some of those moving forward. I'll mention there are caps on this, a statewide cap, but more specifically for a single installation, it's 200% of your annual energy use. And so you can't exceed that, or 2 megawatt hours. You can't exceed that. And so that's a very important financial incentive. We'll look at how that kind of works on a utility bill. If you look at this example, the solar installation went in late March. And so it starts to produce energy in the summer months. And you see in this case, if we're producing more energy than we are using, then we get credited some amount. And so that has this value here where we're being credited using less energy than we're producing. And so we end up saving money. If you look at it in terms of the credit that you get back, especially in those summer months, you're getting money back from the utility provider. Now, how each state handles the excess generation is a little bit different. States like California will have that excess generation credited at the retail rate. I think that's current, I'm not exactly sure. But states like Maryland, the rate is a little bit different for us. How it's typically handled is that excess generation is carried over as a kilowatt hour credit for 12 months. And after that 12 months, you'd be compensated typically at the avoided cost of that electricity. And so that's kind of how that works. And we'll come back to that topic a little later, but to continue moving on with some of these other financial aspects to consider, talk about the SREC market, which stands for Solar Renewable Energy Credit. And in order to kind of share how that marketplace works, I'll start with talking about some of the state level mandates. And I've talked about this in previous sessions. You can go back and review that information as well, but I'll quickly recap by just saying these state level mandates, known as renewable portfolio standards, set a certain amount of energy that has to be generated from renewable resources. So in Maryland's case, we have said that 50% of our electricity, 50% of that energy is to come from renewable resources. Specifically, Maryland says 14.5% is to be from solar development. And so we have kind of an ambitious goal there, not to go through all the different legislation over history, but just to point out where we are today. Again, based on legislation from the 2019 session, we are at 14.5% is to come from solar energy. So what that means for the SREC market is utility providers are required by law to generate their energy from renewable resources. So in our case, we're talking about solar photovoltaics. They've got to hit that 14.5% mark. If they're not able to do that, they can purchase a credit, a solar renewable energy credit, that basically provides proof that energy was generated from solar energy. One credit is equal to 1 megawatt hour. So with all that said, if you have a solar installation producing electricity, this is a separate transaction that can happen apart from the energy. You can continue using that energy from your system apart from this SREC market. But what this enables you to do is sell those credits to people to meet compliance. Otherwise, they face a penalty. So every time those laws increase, it drives that SREC market back up. If you look at the current prices, Maryland is about $78 per megawatt hour. Historically, Maryland utilities have purchased their credits from various states. Maybe more than 3/4 have come from out of state, but there is still quite a big marketplace for those credits. And again, we'll incorporate some of this, the SREC market and the net metering into some of the examples that we get to momentarily. But that's another aspect there. historically, you can see SREC market was much more profitable. It's down pretty low now. If you look at recently, though, if you look at the Maryland trend going after that last law went into effect, we saw an increase from 2018 onward. That may continue to climb, assuming that we're continuing to push those renewable energy credits forward. But there's a number of market factors that play into that. Some other grants and loans that I'll just touch on briefly, some through the Maryland Energy Administration. These change from year to year, so it's best to check on specifics on the website. That's energy.maryland.gov. They have various grants and loans available. Most of the ones that are currently running that are applicable to commercial operations, ag specific, are going to be more geared towards energy efficiency. But again, the energy efficiency and renewables go kind of hand in hand. But here's two options you might want to explore: the commercial, industrial, and ag grant. They've kind of, seems like they've incorporated agriculture into a larger grant program. They used to have more specifically geared towards the ag industry, but it's kind of tapered off. But you'll see 3 grant periods through the year that you can apply to. The first one just ended. We're in the midst of the second deadline here, ending on November 11th. But they have various amounts that'll help you cover about 50% of the installation. And they're looking at, again, most of the energy efficiency. The J&E Lawton Conservation Loan Program is for, they have a certain set aside for government groups, local government. They also have for all other groups, nonprofits and businesses, that would include agriculture, at a 1% interest rate. And so you can have loans there for other energy related issues. But again, go on the energy.maryland.gov and you can get more up-to-date information, and there's other grant programs there as well, but I've highlighted these two. On the right-hand side, you'll see a couple options offered through the Maryland Agricultural and Resource-Based Industry Development Corporation. That's a big mouthful, often called MARBIDCO. It's a bit easier there, but they really have a way with acronyms, don't they? Maryland Urban Agriculture Commercial Lending Incentive Grant. That is one of their programs that is geared towards urban farmers. That money can be used in a variety of ways for development and expansion of your business. And you can look at the specifics of that and see how it kind of overlaps with some retrofits that you might want to do. The other one is the Rural Business Energy Efficiency Improvement Loan. And again, a lot of these are geared more towards energy efficiency, but will kind of help in that sector. And so marbidco.org, you can go and get more information there as well. I'll briefly touch on some others. I know I'm kind of getting low on time, but 2 more that I'll point out from the Maryland Energy Administration. The first is more of a residential program. They have a clean energy rebate program. In this case, they'll give you $1,000 per project. So this is for residential, as the name implies. Now that would only apply to then farm residents, but not a commercial operation. There's also a pretty innovative one, the Maryland Energy Storage Income Tax Credit. And I really haven't seen anything like this before, but this is a tax credit for energy storage. And so you know, this could apply to some battery backup storage or something like that, tax credit. For the next couple of years, at least, it's been enacted. And so that'll be active for several years now. And then one final that I'll share with you is the EQIP On-Farm Energy Initiative, again, a program through the USDA, actually not rural development, it's through the NRCS, Natural Resource Conservation. But they have more towards energy efficiency improvements and auditing and other things like that. So there's a lot of resources out there. A point towards another place you can go is your local utility. They typically have residential and commercial rebates, incentives, and programs ongoing. So call them or go to their website and get more information, and you can see what applies to you. I know we have some folks here from Montgomery and Prince George's County. I'll highlight 2 programs for the Montgomery County. They've got an energy efficiency program that might be worth investigating. Prince George's has a sustainable energy with some incentives there for solar PV. So again, you can look at a county level as well and see additional incentives that will help drive that installation cost down. Other resources through the University of Maryland, if you want to take a look at the Sustainable Maryland program, they have a grants portal where you can look up a number of different options. Some of those, of course, related to energy, if that's what you want to find out. They have other information as well. The Maryland Energy Extension page, page that I'm working with, has financial resources listed there. So you can go to extension.umd.edu/energy and find out more information about these programs and others, grants, loans, incentives, and other things that might be applicable to you. And perhaps one of the greatest resources, I should have pointed this out earlier, but it's what's called Desire, the database of state incentives for renewables and efficiency. It's operated by the North Carolina Clean Energy Technology Center. And what you can do is you can go down to a local level. And so I've done that. I've looked at Maryland here, and you'll see a number of different programs. So for one, they have at the top of the list on this page, they have PACE financing. I've discussed that. They have information on various grants and loans. Here you'll see the tax credit for the storage systems. You'll see sales and tax exemption, a lot of those that we've already mentioned in today's webinar. But you can go to the Desire webpage. It's dsireusa.org, and you can look at a local level, and it'll reference you to the source of information where you can go in and get more specific details moving forward. So again, we've talked about a lot of different topics so far. We've looked at the costs of the system. We've looked at incentives and how to finance them. Now we'll kind of put that together, and I know we don't have a whole lot of time. If you do have questions, continue to put those into the Q&A, and I'll address those as we get closer to wrapping up. But I want to share one example of what a lot of installers will include in their proposals is a cash flow. It may look like this, and it'll kind of list some of the assumptions and some of the way that cash flow works over time. And by cash flow, what I mean here is the money that you save through reduced electricity bills. So you're not paying your utility bill as much utility bill as you were before installing the system, and that's what's meant by that cash flow. So I'll briefly point out a couple things in this example. For one, the initial cost is at $11,000, and you'll kind of need to take note, have they included incentives in this already? Oftentimes, especially with the federal tax incentive, they might include that already. But again, you're responsible for that upfront installation cost. And in this case, they do highlight the cost after that 26% tax credit comes down to $8,100. They've got the annual electric savings, again, part of that cash flow, $705. They've included a return on the investment at 8%. And we'll kind of circle back to what that means, but that's a useful metric when you're looking at investments. I'll come back to that. So as far as the cash flow goes, this financial analysis summarizes what's shown in the diagram in that large spreadsheet, but you can see where that money's going. You have $8,000, $8,100 going into the payment of the system. That's after the tax credit. You also have some costs associated, as I mentioned, this is saying you save $705 on your utility bill each year. Again, you can kind of go back to some of our previous webinars and assess if that's a reasonable estimate or not. In this case, they're including the cost of replacing the inverter, which will typically be expected in less than the 25-year project duration. So I think they've looked at 12 years starting to incorporate that value. Another thing I'll point out is they have a 4% rate of inflation here. And we'll talk a little bit about this, but in part, when you're installing a solar PV system, it's in some ways a risk investing in a technology when you don't know what the future utility prices are going to be. You're assuming they're not going to bottom out, and there's really no indication that they will. But there is some investment that in the long term, if you're talking 25 years, you want to make sure that you kind of have a good assessment of what you expect the utility rates to be. In this case, in this example, they're working with a 4% inflation rate. They're also putting in a negative % for degradation of the system. And so we've talked about this previously, but anything that gets left out in the sun and is operated over time, it starts to drop in its efficiency. On average, it might be 0.5% per year. In this case, they're using 0.7% drop in efficiency, and they've put those numbers together to evaluate this. But the one thing I'll point out in this cash flow analysis, if you track down your savings over time, it's not until, in this example, between 10 and 11 years where you see a return on your investment. And so all those parameters start to go together. I'll point towards some metrics before we wrap up here. Before I do that, let me just talk about the difference between gross and net cost. So typically when you get a bid, or if you're designing your own system, you're going to know what the size of the system is. In this case, we're looking at a 20 kilowatt system. Average price is anywhere from, $2.25 to maybe $3.25 per watt, depending on the system size. In this example, I'm going to use $250 per watt installed. So that comes out to a cost of $50,000. Again, that should be specified on the bid, or when you design the system, you should have an idea of what it'll cost. The net cost takes into account any of those credits or incentives that you're putting in place. In this example, I'm going to apply the 26% tax credit. Again, that goes down after this year's up. It goes down to 22%, but I've left that for 26 for now. And so I'm taking the gross cost, $50,000, minus that tax credit, comes out to $37,000. And so that's what we're going to use as the basis for these different financial metrics. The first one I'll point out is a simple payback model. And so you're taking your net cost, $37,000, you're dividing that by the estimated production from your system. So this will be included on your bid. You can talk with your installer on how they get that number. We've talked about that as well, how you estimate your energy production. So go back and review that webinar where we touched on that topic. But the estimated production in this case is 30,000 kilowatt hours. I'm using a commercial rate here for Maryland at about average rate of about 10 cents per kilowatt hour. So this comes out to a payback period of almost 12 years. I'm not going to tell you what's a good or bad investment. That's kind of between you and a financial advisor and kind of making the decision based on your specific case. But you can decide if that's something that is reasonable or not. Levelized cost is similar, but here you're going to look at the energy over the 25-year period. So if you're producing 30,000 kilowatt hours for 25 years, if you run this equation, you'll get about 5 cents per kilowatt hour, just under 5 cents per kilowatt hour. Typically, you say this is a reasonable investment if it's less than what you're paying for your utility rate. And so in this case, we might say this has opportunity because it is lower than that. Again, I'm not going to tell you whether to invest in a system or not based on that, but this is a good indicator. These parameters aren't taking into account a lot of the other facets that we've talked about, operating and maintenance costs, and we really don't have time today to get into the nuts and bolts of those different costs, but you can kind of start to assess a system through these back of the envelope calculations. The rate of return is kind of the flip side of the simple payback. And so in this case, you're dividing by your net cost. And this gives you a percent. Again, this is a useful metric when you're comparing a solar PV investment to other investments. So if you're looking at a long-term government bond for more security, it might be down by 5 or 6%. Or if you want a large stock with a good return at 10%, that might be a different investment. Again, this is a case-by-case basis, but that's another way to look at it as well. And the benefit cost ratio, again, this is just, as the name implies, a ratio of the benefits to the cost. And so if you have more benefits than costs, that's going to be more than 1. Your number is going to come out to greater than 1, and that'd be an indicator as well. I didn't go through a robust example of this, but that's just another way to look at the system. I'll quickly touch on this, and again, I'll answer questions in just 1 minute. But if you take a look at, in the examples I've done, I've just looked at the tax credit, but you could look at a number of the other options. We talked about grants, depreciation, and other factors as well will help drive that system cost down. So I've included one example here in this table. You'll see in the first case, coupling a 26% tax credit, 25% grant with the USDA, the 100% bonus depreciation, SREC market, your levelized cost in this case comes down to $465, which is, if you didn't apply any of those incentives, it would be much higher. And so this shows some of the importance of incorporating those different financial incentives into the picture, because in this first case, in the 465, that's more of a good investment in terms of lower than your utility rates. Again, what happens to the energy prices moving forward is a little bit hard to say. We've seen, over time, consistent rises in energy prices. So you can kind of count on that. Like I said, it's probably not going to bottom out, but there is still some risk involved. When you're looking at a bid, you might want to, take note of if they're using nominal or real energy escalation rates. There's a difference there with real energy, with the real energy including inflation into it, and so, or the nominal includes the inflation. So you need to kind of know on your bid what they're basing that off of. But just as kind of a pointer, on what to look for on a bid, if they're telling you that you're going to be saving more money than you think you will, look at some of the parameters. One thing might be, what are they basing on the price of the electricity on? If they're saying it's 20 cents or 50 cents per kilowatt hour, that's not realistic. Here's kind of where we're at now. We're looking, at between 10 and 12, maybe around 11 cents per kilowatt hour for that system. And so that'll give you an idea there. A couple of resources: you can go and get utility rates from your utility provider. There's some resources I'll share here: the openei.org website, as well as the EIA. That's the Energy Information Administration for forecasts on energy prices. Are two useful tools. And then two final tools I'll point to. We've used PV Watts in the past. These are both developed by the National Renewable Energy Lab. We'll probably use PV Watts in the future, and if there's interest, we'll do some more work with the System Advisor model for more robust economic modeling, but that's another tool. Both of these are free resources that I can point you towards in getting better investment strategies moving forward.